Speak YouTube channel. If you're new to the channel, please make sure that you like and subscribe. And if you're returning to the channel, I want to thank you for your support. In this episode, we're going to talk about what's the difference between trading stocks and actually investing in stocks. Both of them are sort of like investment, but there is a slight difference. On the topic of trading stocks, normally when you're trading stock, you either consider yourself as a day trader or a swing trader, so to speak. And what the difference is day traders, they normally trade stock what is called intraday. So they trade stocks within the hours that the stock market are open. And some don't hold stocks overnight. They normally sell all the stocks and they buy new stocks in the morning. So what happens for day traders is, let's say for instance, they get into a stock, and we're just going to use this price to make it simple. They get into a stock for $1, so they buy shares of this stock for $1, and they're betting that the stock's going to go up. So the stock may go up 10% to $1.10. The day traders are going to sell all of their stocks and be done with their stocks, or they may get back in and trade it again for that day. As if with swing traders normally they use like trailing stops or stop losses, and what those are is, okay, the same scenario. You get into this trade at $1, and you say, if it go up to $1.10, sell my shares. If it go down to $1.10, sell my shares. But you may hold this stock for 1 week, a month, 2 months, and normally with swing traders, they are gonna be looking at stock charts to try to see which way is it, either a bullish market or a bear market, and they're gonna trade with the way that the market is going. So that's normally what happens with swing trading. So day trading is normally intraday. You hold a stock a day, maybe 2 days, and you're traded. Swing trading is a couple days to a week to months, but normally swing traders are like protecting themselves with stop loss limits or sell limits, or they're using limits to like get in and out of a trade. So it's they have a plan when they're going into the trade. Okay, and as far as investing is, you have high conviction in this stock, so you literally believe in this company. So it's normally going to be a reputable company, some company that you've done your due diligence in, such as like Amazon, Apple. There's thousands of companies out there, but I'm just using these because most people know these companies. So you're gonna put your money in these stocks, and you normally invest 1 year, 2 year, 3 year, and it varies for every investor. But these aren't stocks that you're gonna be getting in and out of in a day or so. That's normally how the long term investors go about it. And then they invest long term because after you've held a stock for 1 year and 1 day, the government give you a tax break on it. And that's one of the benefits that day trader and short term swing traders, they don't benefit from that. Like in California, you pay the federal tax plus the state tax. So let's say for instance you're in a day trade and you gain $1, you're normally only gonna keep 50% of that because you're gonna pay close to 50% in taxes. Whereas in investing, when you invest something, you hold it for over a year or so, and then if you do decide to sell that stock or whatever, you're gonna pay way less in taxes. So that's kind of the difference between trading stocks and investing in stocks. There's much more that you can elaborate on, but most people can trade any stock, but most people only invest. And when I say invest, I'm talking 2, 3, 4, 10 years out. They only invest in stocks that they really believe in. So, like if you were to ask me a good platform for trading, I trade a lot on Robinhood, but I invest with M1 Finance or Vanguard. Vanguard is actually where I invest most, but yeah, that's the difference. Robinhood allows you to get in and out of trades quick intraday, whereas with M1 Finance, it's a long term play. So you do try to find the best price, but when you're looking at a stock and you figuring you're gonna hold it for 10 years, you really don't try to focus too much on getting in at the best price, because if the market goes up, if you're a bull and you intended that the market's gonna go up, that's really what you need the market to do. Whereas day traders, you have to get in and actually time the market to get in at a certain support, and then hopefully that it bounce off the support and goes up. So that's basically the difference between trading and investing. So make sure that you all keep it clear that when you're buying stocks, if you're selling them real quick within weeks or so, that's technically trading stock. You aren't really investing in the company. Investing is holding for the long term. Do not think that I'm saying at all that you can't make money trading stocks, because I trade stocks daily. But I've made most of my money off investing in the stock market. Sometimes I actually trade stocks and I take the profit from trading stock. I put it in my high conviction stocks that's in my investment portfolio, and I hold them there. So with that being said, make sure that you all like and subscribe if you're getting anything from the content. It really do helps out with the channel. And until next time, this is Enso Speak. Let's talk trading versus investing in the stock market.